Hello, Crypto Geeks! Back with another video, and today we have some actually huge updates. I think in relevance to the settlement and in relevance to XRP and the whole crypto market. Huge message today from Federal Reserves, and it's going to change everything. There's a couple of things I want to talk about. I'll start first of all by letting you know I'm not a financial advisor, neither am I trying to give you financial advice, and I'm not a legal advisor, so I'm not trying to give you any legal advice. If you're looking for either of those, please search on Google for your nearest lawyer or accountant. With that said, please click that like button. Make sure you click that like button. It really helps me out. Click subscribe. Really helps me out. Make sure your notifications are on. And join my Patreon if you'd like. With that said, let's talk about this message from the Federal Reserve. Now, I was actually in shock because of how close it actually came to an interview. Everything that was mentioned by the Federal Reserve was brought up in an interview with Brad, so the Ripple chairman. And it almost sounds like they're both saying the exact same thing. I'm going to show you just a part of it here where the Federal Reserve, Jay Powell, says about the reason that they're worried about cryptocurrency being the main means of transfer. And it's about the volatility of cryptocurrency. So let me run that video for you, and then I'm going to show you right after exactly what Brad says. And they are so in sync. So I'll have you guys watch this video.
Today we are in the midst of a technological revolution that is fundamentally changing our world, reshaping how we communicate, access information, and purchase goods and services. As the Central Bank of the United States, the Federal Reserve is charged with promoting monetary and financial stability and the safety and efficiency of the payment system. In pursuit of these core functions, we have been carefully monitoring and adapting to the technological innovations now transforming the world of payments, finance, and banking. The effective functioning of our economy requires that people have faith and confidence not only in the dollar, but also in the payment networks, banks, and other payment service providers that allow money to flow on a daily basis. Our focus is on ensuring a safe and efficient payment system that provides broad benefits to American households and businesses while also embracing innovation. In the Fed's early days, the development of dedicated telegraph wires facilitated the transfer of funds between banks. In the 1980s, automated clearinghouse services made it possible for electronic bill payments to be an alternative to paper checks. In 2019, the Federal Reserve committed to building the FedNow service, which will enable banks to provide real-time or instant payments to their customers around the clock, 365 days a year, benefiting communities across America. Recently, the rise of distributed ledger technology, which offers a new approach to recording ownership of assets, has allowed for the creation of a range of new financial products and services, including cryptocurrencies. To date, cryptocurrencies have not served as a convenient way to make payments, given, among other factors, their swings in value. Nonetheless, coins tied to the value of the dollar or another currency, known as stablecoins, have emerged as a new way to make payments. These stablecoins aim to use new technologies in a way that has the potential to enhance payments efficiency, speed up settlement flows, and reduce end-user costs. But they may also carry potential risks to those users and to the broader financial system. For example, although the value of a stablecoin may be tied to the value of a dollar, these coins may not come with the same protections as traditional means of payment, such as physical currency or the deposits in your bank account. Therefore, as stablecoins' use increases, so must our attention to the appropriate regulatory and oversight framework. This includes paying attention to private sector payments innovators who are currently not within the traditional regulatory arrangements applied to banks, investment firms, and other financial intermediaries. Technological advances also offer new possibilities to central banks, including the Fed. In particular, technology now enables the development and issuance of central bank digital currencies, or CBDCs. A CBDC is a new type of central bank liability issued in digital form. While various structures and technologies might be used, a CBDC could be designed for use by the general public. For the past several years, the Federal Reserve has been exploring the potential benefits and risks of CBDCs from a variety of angles, including through technological research and experimentation. Our key focus is on whether and how a CBDC could improve on an already safe, effective, dynamic, and efficient U.S. domestic payments system. We think it is important that any potential CBDC would serve as a complement to, and not a replacement of, cash and current private sector digital forms of the dollar, such as deposits at commercial banks. The design of a CBDC would raise important monetary policy, financial stability, consumer protection, legal and privacy considerations, and will require careful thought and analysis, including input from the public and elected officials. To help stimulate broad conversation, the Federal Reserve Board will issue a discussion paper this summer outlining our current thinking on digital payments, with a particular focus on the benefits and risks associated with CBDC in the U.S. context. As part of this process, we will ask for public comment on issues related to payments, financial inclusion, data privacy, and information security. We are committed at the Federal Reserve to hearing a wide range of voices on this important issue before making any decision on whether and how to move forward with a U.S. CBDC, taking account of the broader risks and opportunities it could offer. The paper represents the beginning of what will be a thoughtful and deliberative process. Irrespective of the conclusion we ultimately reach, we expect to play a leading role in developing international standards for CBDCs, engaging actively with central banks and other jurisdictions, as well as regulators and supervisors here in the United States throughout that process. The Federal Reserve remains committed to ensuring that the public has access to a safe, reliable, and secure payment system. Our forthcoming paper on the evolution of digital payments is intended, along with our other work as supervisor, regulator, and payment system operator, to advance the objective of ensuring that the payment system and the economy work for all Americans. We look forward to hearing your thoughts on this important topic.
Now, that, if you had watched the interview with Brad, sounds identical. Now I'm going to show you just that clip from Brad's interview where he talks exactly about how Ripple and XRP solved this exact problem.
In XRP.
But how can there be clarity on regulation when different countries are adopting different strategies when it comes to regulation? And the other thing as well is volatility. I mean, why use a cryptocurrency when it's so volatile right now?
Yeah. So look, it's a really important question. I think there's a lot of misinformation out there. I've kind of jokingly suggested that when people talk about regulatory uncertainty, it's often people because they don't like the regulation. They're not actually regulatory uncertainty. If you think about a XRP transaction from one regulated financial institution, a bank or a payment provider, they're doing what's called a KYC check, which references Know Your Customer. There's a global regulatory framework around KYC. That's at both endpoints of an XRP transaction, into and out of. So I think the regulatory certainty actually is much better than people realize. It's just educating banks, regulators about how it actually works. Now, the volatility point is also a good one. You know, XRP has clearly been volatile, as all digital assets have been. The nature of how an XRP transaction works, though, it's 1,000 times faster than Bitcoin. So the volatility risk you're taking around XRP is only for 3 seconds. So the volatility risk ends up being very, 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 very small because it's so fast.
For XRP, you've been looking at banks. If you take a longer term period, who else are you targeting for XRP? What would make sense?
Well, I think any payment provider, we're really trying to solve that cross-border payment transaction. So if you're going, we talked earlier about the US dollar to the Mexican peso. It's one of the corridors we have live with XRP today. You can hold a US dollar, sell that dollar, and buy XRP. In 3 seconds, you can move that XRP to Mexico and then sell the XRP and buy the Mexican peso. Whether you're a bank, a payment provider, eventually even corporates can take advantage of a dramatic decrease in cost and a dramatic increase in speed and how those transactions work.
Now, you know what's crazy is what the Federal Reserve is saying is they're not going to release the report until when? Let's take a look. I'm going to show you this clip. I'll show you exactly when they say they're going to release this report. And timing is everything for cryptocurrency. You should know that by now for sure. Listen very closely.
Of issuing a central bank digital currency, saying it's going to issue a paper And that paper will be issued this summer that will focus on the benefits and risks of a central bank digital currency.
So the crazy thing is they're gonna issue the paper in the summer. Now keep in mind, they've been doing, if you listen to the whole interview by the Federal Reserve, Jay Powell, saying they've been doing this research and looking into it for years. And they can't release the paper now. They have to wait until the summer to release it. Doesn't that ring any bells for you in terms of a possible settlement? That is just in terms of analysis, if you want to make sense of things. Another big point. Guess, if you look just a couple of weeks back, who did Ripple hire? Oh, they hired former U.S. Treasurer. What's their job? Looking at the U.S. dollar. She has her signature on the $100 bill. None of this connects. I mean, why would she ever join Ripple's board of directors if she saw an end to the company? If she didn't see huge potential and growth, not only for Ripple in her former experience, in her former connections. So this is big, and Ripple didn't hire her just because she's an excellent or has an excellent portfolio. But keep in mind, especially in the United States, it's all about connections. Look at the lobbies in Congress. It's all about connections. So who she knows matters to Ripple when they hire a person to become part of their board of directors. And don't tell me she doesn't know heads of the feds. She doesn't know the heads of CFTC, the head of the SEC, Gary Gensler. Don't tell me she doesn't know him and she doesn't have personal connection with him. So she was the treasurer. So that's huge. And she didn't join Ripple for no reason. All of these, in my mind, connect. Again, linking to a settlement very soon. Once we have a settlement, we can get this volatility, particularly for XRP, under control. You can, if you looked at the crash from earlier, I know there was a part where Ripple or XRP crashed, but before that, the entire market was crashing except XRP. It was stable. It had almost no fluctuation, no drop. So now there is obviously manipulation, and with a lot of pressure, things can change in the whole market. But in general, it's stabilized. And look at the market today. I mean, just yesterday we thought it was the end of the bull market. People were saying we're going into the bear market. And I was clear in my last video, we're nowhere near a bear market. But look at the market back up today. Bitcoin is back above at 40. It actually reached a little bit higher today. Cardano's back at 180. XRP back at almost 120. Binance is back close to 400. The market is back. So the drop was just a flash crash and we're back up. Look at the percentages that we're up. Even Dodge, the useless coin with no utility, is up 12%. Bitcoin 6%, and so on. So guys, keep these things in mind. Keep these things in mind, and everything connects. Nothing is out of the ordinary or just there for no reason. All of these make sense. And once you see this video, you sometimes you need somebody to bring these dots together. And that's what I'm hoping to do. So make sure you click that like button. Please subscribe. And please join my Patreon if you can. And if you can share this on Twitter to educate more of the crypto community, please do that. This is very big. The fact that the bank is even considering cryptocurrencies now, central banks in the U.S., points towards big regulation. I know people were really upset today about the taxes for the government taxing or requesting reports, IRS requesting reports for anybody that exchanges more than 10,000. But you know what? That's excellent. The fact that they're actually, this is pointing to regulation, that they want to keep it. If they didn't want to keep it at all, if they want to completely ban it, they wouldn't care about taxes, right now. The fact that they were looking at taxes proves that they want to keep cryptocurrency alive. And this is excellent news. I mean, yeah, we'll pay a little bit extra taxes, so what? But cryptocurrency is alive and well and going to do even better in the coming days, weeks, months, and years. So I hope you enjoyed this video. Again, make sure you click that like button and you subscribe. Crypto Geek out.